Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, let's have a look on the gold market. So you can see miracle hasn't happened that we talked about. It's about these two grabbers. So the market actually stands on the edge, and if you would like to take a long position, so let's wait for a confirmation by the end of the session, because everything could change depending on where market will close. And you can see that yesterday market continued downward action. Actually, this performance is not really surprising as if you take a look at the other markets. So it already considered in a euro currency video. So first of all, on the dollar index, you can see what's going on. Dollar index going higher. The actual failure of these hand shorts is absolutely evident. The market is coming to challenge this stuff. Yesterday it was upside performance on the dollar, which is correspondingly was a pressure on the gold market. So this setup suggests that dollar should keep going higher, which also will make them pressure on the gold market in the nearest few sessions. This is daily chart. On 10-year bonds, finally some clarity has happened. You can see what we've got. So big jump on the yields, which is also supportive for the United States dollar and negative for the performance of the gold. So in the current circumstances, we could say that short-term context, short-term sentiment in the market, mostly bearish. In fact, on a gold market, we have, don't forget that we have the double repo sell pattern on the weekly chart, and it suggests that market in some future should reach at least the target of this pattern. Theoretical target stands around 2160 support. Trend stands bearish on the weekly and the daily chart currently, and taking it all together, supposedly those who trade on the daily intraday charts could consider taking short position some pullback. At the same time, we have to be extra careful around this level, because on the daily chart, once we already briefly talked about this, so here we see the performance that reminds some kind of the hand and shoulders pattern, and confluence stands right below the neckline. So it might be Jordan directional pattern, hand shoulders failure, that it calls as oops pattern. So it happens not only with the hand and shoulders, but any other classical patterns, double bottoms, double tops, triangles. So with any classical pattern that could happen. The idea stands so that when you have very strong support below the neckline, market could not reach the target of the pattern, but could be stopped by the strong support and reverse the action. So that will catch the traders on the wrong direction, starts triggering, and market will accelerate upward action, fixing the, actually acknowledging the failure of this pattern. So that's the idea. And it seems that the next, well, chance for taking long position in the next levels that we could consider, at least for the potential bullish setups, where should be relatively safe to consider long positions, will be this confluence support in 2260, 2270. Because market hasn't formed patterns that we discussed yesterday, grabbers has been failed, has been erased. So for now, we do not have just necessary context for taking the long position. We don't have patterns, we don't have trend in our direction, we do not have even any strong support areas where we could think about the position taking. Nothing. So from that standpoint of view, it would be better to wait either for the patterns or when the market will reach at least this strong support area. On the 4 time frame chart, there are some suggestions that theoretically we could get. So first of all, we have the same downside patterns that we already were considering previously, but additionally, you can see if market will show some minor bounce, here we could get, for example, the butterfly. It's also possible with a few targets to the downside, 2267, which is very close to the daily support, and 2240, so will be next area. It's also, these both targets envelop the major OP of this ABCD pattern. So that's potential target for the downside action if market will keep going lower. So since we do not consider any long position, bears currently could wait for some bounce to the predefined level. So here's also the trend line of the daily flag that has been broken. So first level that seems more or less interesting is around 23.20, circumference resistance. Next one will be 23.40. So yesterday we talked about the hand shoulders, so we said if market somehow will form the hand shoulders here, we could start thinking about taking long position. But as you can see, pattern has not been formed. Market just collapsed. Here's even it exceeds the 1618 normal ratio for a hand shoulders of the XA swing. So this drop was even lower, which is not good. Yes, we have some divergence, but I think that it's not reliable. It's just some byproduct of the fast drop. So that being said, bulls have to be patient and wait for either strong support area or appearing on some clear pattern that could minimize potential loss and make the taking long position currently acceptable, which we do not see currently. For the bears, in general context stands on the bearish side. Grabbers have been erased, market shows downside action, cross-market analysis points on the bearish signs for the gold, rising of the dollar and yields on the market. So potentially possible to consider, but once again, it will be better to do also around the strong resistance levels that will just make process easier and safer. This particular position taken. That's actually what we have currently on the gold.